Ken Ryan Anthony, welcome one and all. At the link, at the link, at the link. We are keep it yard all in a foreign. Hey. Proper med, so me talk and laugh, cause that worth more than money in a ring. At the link, at the link, at the link. When we touch topic, you get more than in. Free feel like, share and subscribe and drop a comment, make we know what you think. Dear one family, wagwan boss, share my journey in a life walk. When me know my tell you on your part. So if you don't know, just listen from the start. At the link, at the link, at the link. Stay tuned, cause you know it's a win-win.
Alright guys, wagwan. Alright, so on this episode, you'll be vibing with Anthony the driver, right? I'm a co-host, Kenroy the realtor. Alright, we're gonna continue from where we left off on episode 1, where we were talking about real estate. And we're gonna get into the down payment assistance program. Kenroy said, enough is a down payment assistance program because it's a lot more than just down payment assistance. Alright, so we just call it the assistance program, right? I know you have NACA, I know you have Sonima or Sonime, I don't know what they call it, right? And you have so much more, right? But on today's episode, we're going to talk about NACA, right? And NACA is for first-time home buyers. I'm limited in knowledge on it, so I'm allow Kenroy, the realtor, to really give us the information and knowledge we need, right, on down payment assistance program or assistance program in general.
All right, perfect. So where my expertise is going to come in is that I'm a certified NACA realtor.
What does that mean when you say you're a certified NACA realtor?
So NACA hosts their own realtors, but they expanded to be trained to know the NACA way as a licensed real estate agent in whatever state you're licensed in. So I'm licensed in the state of New York. I went to the training, so I know the NACA way, and I'm certified to basically to represent any NACA buyer.
All right, so stick a pin, all right? Because there is a few myth, all right, surrounding it. I don't know if it's a myth or is reality, right? First and foremost, we're going to explain what is the NACA program, right? And why it's important and why you would recommend it, right? That's one. I'm just giving a premise of where we're going with this conversation. And secondly, I want you to talk about the requirements, because I hear the requirements can be a little bit stringent, meaning long. You get what I say? And very discouraging to a lot of people, right? I know you're someone personally that has been through the program. I know you know people that has been through the program, and I know you were successful within the program. But before I run over the conversation, explain to me what exactly is NACA.
Okay. NACA is a first-time home buyer housing program that basically helps first-time home buyer with certain elements in the home buying process. Educate first-time home buyers about buying process. It also helps first-time home buyer with certain requirements that you are going to need in terms of down payments, in terms of your attorney fee, in terms of closing costs. So NACA is a first-time home buyer assistant that basically help you with your first-time home buying process.
So you're saying basically if I'm a first-time home buyer, right, and I basically have a piece of money, let's say $4,000, $5,000, you're saying I can approach NACA and get a house?
Not even have a piece of money. If you have the whole money, you can go through the NACA process to save some money. So NACA is not just for people who is looking for help. NACA is a whole first-time home buyer program for people who have the money, who don't have the money, who want to just go through NACA first-time home buyer process.
Okay, so all right, so explain to me what exactly is NACA, like what them do, like how them are gonna help me, like I'm oblivious to what NACA really is, like what is down payment assistance, like what is all of that.
Okay, so great questions. Let's use my experience and also some of my clients' experience, because I've also helped around 6 buyers to go through the same process that I went through. So as a first-time home buyer, I did save the money, but I said, why use the money where I can get help with taking advantage as a first-time home buyer? Because now when you basically own a property, you are not going to be classified as a first-time home buyer. But when you sell your property, you become now again a first time home buyer.
All right, stick a pin, because I hear there's a trick to that. I hear after 3 years, you automatically become a first time home buyer again. How true is that?
It depends on the state.
Okay.
In New York, I think that allowed. Once you have a mortgage under your name, you're not a first time home buyer. I could be wrong.
Okay.
So the audience them can research that. But so go back to it. What NACA and what them do for you. So think about the average down payment costs. I'm gonna want to get in a number, but just I think about the old average for Long Island, right? The house price can start at $650, and then the required for first time home buyer is 3.5% of the purchasing price. How NACA come into play is NACA is not requiring you to have or to put down that 3.5% that's needed for traditional first time home buyer down payment.
Right.
Also, what NACA does is for NACA, you have to do everything NACA. You have to have a NACA certified realtor, you have to have a NACA certified inspector, and you have to have a NACA certified attorney. So with a certified attorney, NACA would basically pay the attorney fee. So you save attorney fee and not require down payment. And then NACA would also take on some of the closing costs. There are going to be fees that you're going to need to pay. Everybody with them here, them gonna say, it's too good to be true. That's the reason why it's too good to be true. I fall on that too. When me here say, all right, everything are gonna be free. It's not everything is gonna be free. You need some skin at the game, and when we mean skin at the game, need funds as well, where you're gonna pay some costs. You're gonna pay your inspector, which is gonna be a NACA inspector. You're gonna pay a portion of the transfer tax, if there's any transfer tax. But you're not going to pay your attorney fee, and you're not going to pay a higher portion of I forgot the fee off of the top of my head, but not going to pay some of the fees them, and you're going to basically need to pay some of the fees.
So explain this to me. Why would I choose NACA, right, knowing that there probably be so many things involved, right, just to get approved for this loan, rather than just save some money and go approach a traditional lender and try get a loan?
NACA loan process is lengthy, and it's lengthy for a reason, because NACA are gonna take you through the steps where how them structure it, it's hard for you to fail. Or them don't want you to fail. So that's where the lengthy process as in fact that they want to make sure, say, you pay your rent on time. I don't
but what if I miss like a month? What if I was late on like a month?
Then you have to basically have a written explanation as to why.
Okay.
What also do that traditional mortgage or loan officer or banks or stuff like that don't really look on. Them don't look on the actual credit score, or them don't look on your actual credit report on a magnitude of a traditional bank would look on it. Meaning, if you have, I'm going to talk about what we know now. If you have certain debts like a collection or a past due debt that is under 2 years, NACA basically require you or recommend you to pay it down, pay it off, or wait around a 2-year period for it not to be basically go against you. So to say.
I remember when I went through the process, right? Because you made me knowledgeable on the process, and I was going through the process, right? And I do the workshop, right? I get my membership, and then I start upload all of my documents them, which every month you have to keep up with every month. So as your paycheck come out, you have to upload it, right? And I know there was this budgeting thing that you have to do, because you have to do like a budget, right? But I did all of that and ready for meet my counselor now, and I met the counselor. And my counselor basically that tell me what I actually qualify for, which was so surprising to me, with even the debts I have, because I did have credit card debt and I did have my car loan same way, and she already tell me, say, all right, you still qualify for so much, right? And I mean, I was excited, I was elated, never when we really want, you see me, because there was some rules as to how much them want you for paying a mortgage, for them comfortable and for you comfortable, right? So of course I wasn't feeling the best with that when me here, but no, me have to go to a next step regardless. What me really want to get to is when she link me back now and say, all right then. After me serious and me done upload everything, she link me back and say, all right then. Here is the documents that we have to go work on now. So for my credit report, I had like 4 different names. But she tell me something I have to go write letter. Yes, what me I say explaining why so many names, right? On the credit report. Like me live set 3 different address. She said me a template for say me have to go write letter for why me did live, right, at 3 different address. And I think there was something else with my tax return. Something never did a match up. And again, me have to write a next letter for say why that never did a match up. Like, it's, the process is very lengthy. Would you say that at the end of it, it's rewarding? Like, because what if me do all of that and still don't get approved? How likely is it that me do all of that and get approved?
Again, me go through it. Clients go through it. So, as something when we go through and it's worth it.
Right.
Go upon my personal experience. I mean, I show you the benefit will make it worth it, and you're gonna say, "Yo, want that." I went to closing at my time. We're talking about I purchased my property, my house in 2021, right?
Like post-COVID, like that was right after COVID.
Yeah. So I was considered, and we're going to touch upon this more in details, I was considered a non-priority because of that time, based on my household income, surpass the areas that I wanted to buy into. So I was a non-priority. And I'm going to tell you the difference and the benefits between non-priority and priority. But I was a non-priority. No, I was able to use the money to buy down my points instead of as a down payment.
What money? You're talking about money where you actually save up?
Money where me save up. So I save. If anybody that go buy a house, they need to save up some money. You can't just buy a house with no money. All right? So I'm just put it there. So it's there. So I'm going to save up some money. And how NACA loan work, you can put it down if you want to put down upon the purchasing price, but them also allow you can buy down the points. So my purchasing price was $548 at the time. So instead of me use it for put down, in 2021, the interest rate was at 2 point something. So I'm gonna say, yo, all right, how much me can bring it down to, and how much money me need. So at that time, I need 25,000 to bring it down to 1.62. Isn't me I say?
As in to bring down your interest rate to 1.62?
So my interest rate is 1.62, yes. So
what? That is unheard of.
Yes.
Your interest rate is 1.62.
Fixed rate 30-year mortgage with Bank of America. 1.62. So
and how much is interest rate now, currently?
Currently, right now, as we're speaking, I don't know the exact amount. I believe it's in the fives. I believe it's in the fives.
That's crazy.
I know, as a realtor, I understand the long term. Instead of putting it down on the purchasing price, just put it down, just buy down your points. And they gave me that option. So one, them give you the option for buy down the points. You can use your down payment, buy down the points. That's a plus.
Buying down the points is buying down the interest rate.
Buying down the interest rate.
So therefore, that will affect your mortgage directly.
If you're looking at a long term, because if it go into a fixed rate, you can go fixed rate 15 year, or you can go fixed rate 30 years. So the interest rate are gonna be the duration of 30 year based on the calculation and based on how much you want to pay a month. So what NACA also do is NACA calculate, instead of giving you a mortgage and say 650,000 mortgage year, and around that time it probably be around 3,500 for your mortgage. What them do, they look back at how much you can afford first, and how much you can afford first a month time would basically calculate to your purchasing price. Instead of traditionally them just give you a purchasing price and say your mortgage is this. NACA calculate looking at how much you can afford monthly to now calculate your purchasing price, and that's how you get approved. So the benefits coming at this is NACA naga give you something where you can't manage. So NACA go say how much are your debt, how much are your income, and when your debts, that's why them do the budget, because them look on overall your debt, how much you pay for mortgage, how much are your credit cards them, and so forth like that. And all of that I can calculate minus your income and see how much you can afford. So what them do now, them do like a 3 to 6 months exercise. them say, all right, your rent are going to turn into mortgage. So if you pay 2,500 for rent, I see you save another $1,000 every month. So now 2,500 plus 1,000, that's a $3,500 mortgage. So if you can do that 3 to 6 months and show NACA say you can do that without missing a payment of your rent and without missing every month putting that $1,000, then I basically put you in a like a exercise to see if you can afford $3,500 a month. No, how that help you? You get an extra if for 3 months, $1,000, if for 6 months, $6,000 save up, right? And them show how disciplined you are. So you go pay your rent, your savings, and all of your other bills them you need for pay. And you can't believe it. Because them are go them are go prove it, say you
All
can't
right, so I
afford
don't
that.
understand that. So yeah, so then basically I go run an exercise.
Yes.
And this exercise is what? You go put every money in you put all your money I go to one account. And you go pay all bills from that said account?
No.
Okay.
What them really want to see if you can afford wire approval mortgage monthly amount. Remember, them they give a purchasing price, you know.
Right.
Them give what you can afford monthly mortgage amount. So if you go and them say, hey, your monthly mortgage amount based by your debt, your income, and all of your financials that you them feel say you can afford $3,500 a month, which is $3,500, but your rent is $2,500.
Right.
So now them are gonna say you still have to live, right? So you have to continue paying that $2,500, but you have to save another $1,000. So technically, if them did give you the mortgage and you go buy a house, you'd have to pay $3,500 a month based on that. So them want put you in a exercise for you to show yourself, can you and your significant other afford $3,500 a month for 3 months, for 6 months? Remember, I'm gonna give a 30 year, you know. So I think that exercise is fair. Some people might say, oh, that is an overkill. But if you can't pass the exercise 3 to 6 months, how you gonna pass the exercise for 30 years?
But when it comes to NACA, do I need to be making a certain amount of money for approach them?
It's all about your debt.
It's all about the debt. Explain.
Yeah. Remember, you know, if you make $100,000, you know, and if you make $100,000, with tax and everything come out of that, say you bring home a month, $4,500.
Right.
Say you bring home a $4,500 paycheck net. That's after taxes and everything. Or
I mean, you're saying that's after taxes. I mean, that's good to bring home.
That's good to bring home.
Yeah,
we just our short numbers out
okay.
there. $4,500 a month after taxes, right?
Right.
Then you have to look into it. Do you pay rent? How much is your rent? Say you live by yourself. $2,000 for a nice apartment. You're left back with net $2,500. 2,000 from 4,500. You're left back with 2,500. Right? Now, how much are your credit card bills? How much are your car insurance if you have car insurance? How much are your cell phone bill? NACA do that as a budget system. Say all your expenses, credit card, car note, and everything come up to $1,500. Now you have $1,000 left.
Right.
Are you saving that $1,000, or you just want to go on vacation every other 3 months or whatsoever? So the might look on that, which is called miscellaneous spending. Say if you're not doing no miscellaneous spending, we're gonna say person A is a good saver. Person B is not a good saver. Person B, this is person B. Person B have a $2,000 rent. Them spend $1,500 upon debt, and them have $1,000 left, and them splooge out the $1,000, and them save about $100 a month, right? Now, person A is a great saver. Person A probably still live with them parents, but them parent, what them do is rent them out to the basement, so them pay $1,000, and them can document that, say you pay $1,000, because NACA go on document that are proof that you did you're paying rent. So I'm gonna look at your bank account or wherever you pay your parents, if it's Zelle or cash. Now that person have $3,500, right? $1,000 from 4,500, leave back 3,500. I know you're not good with maths, but follow me. All right. So $3,500. So now, is that person saving that $3,500, or is that person spending? Person A is really good. Him save the $3,500. Now, so the two person them go up to NACA. NACA said this person rent is $2,000. Now NACA said based on them debt and everything, you only can probably afford a $3,000 mortgage, right?
Yeah.
No, NACA say you still have to pay rent for $2,000.
Right.
But from your 4,500, you got left back with, if you're minus 2,000, you're left back with 2,500. NACA said because you approved for $3,000, you have to save up another $1,000. For sure, say you can pay a mortgage for $3,000 and still keep your old expenses because you still have to pay a car note, you still have to buy food. Person A now say, yo, I'm pay $1,000. NACA say, all right, you approve for $3,000. NACA say you still have to pay parents them $1,000 because at the end of this, them have for sure say you did pay on time $1,000, but you have to put $2,000 away in a saving. For sure say you can manage $3,000 mortgage. Person A now have a lot of debt. Person B has a lot of debt. So now debt to income ratio is better for person A. So person A can get approved more faster than person B.
All right, I understand that. If you get more interactive, walk me through your NACA process. Or somebody where you know, right? Because you tell me, say you know people actually was successful within the process. So just walk me through two scenarios. But firstly,
mine,
go ahead.
I'm going to watch it through a client.
All right, go ahead.
First, mine. Back in 2018, I was skeptical.
Right.
I have a friend who I work with, and my friend introduced me to NACA and said, because also what NACA is required for you to do is called community service. So now this, what I'm doing, talking about NACA, right, it can classify as a community service for me. That's one of my benefits. NACA just say, hey, spread the word. That them do.
Right. Is that a requirement?
That was one of the requirements when I did it.
Okay.
I believe them just ask if a post and them ask if a tell your story as a requirement. Just spread the word. So he was doing his duty of spreading the word and invited me to a NACA workshop, right? Them time
you're talking in person? Yeah.
These was in person because COVID never happened yet in 2018.
Okay. Oh, this is from 2018.
From 2018. No, I went and I was very skeptical because I say, oh, this is too good to be true. Like, right, tell me, say, no down payment requirement, no closing costs, no attorney fee, and all of these things.
But them say normally if something is too good to be true, usually it is.
No, they must, sometimes, yeah. Them say if it's too good to be true, usually it is. So I was waiting for that reason for it to say, that's a reason why.
But what caught you? Why were you saying this is too good to be true? Like, what caught your eyes?
Why am I saying?
Was it the no down payment or the fact that you can buy them your points?
Like, what the catch? I just want to know the catch, right? And then them basically stated, like, listen, people, and 100% free in people, you have to have at least a minimum of $10,000.
10 grand.
So I said, see it there? I know see how the catch, So I left and I did sign up, but I never did follow up with it.
A lot of people do that though.
Yeah. Teen come.
Yeah.
And the man say, yo, man, in my work, the man say, yo, I'm close for my house. And I say, And the man say, Kenner, I guess how much I come out of pocket with? I say, how much I come out of pocket with? The man say, I just come out of pocket with 4,700. I say, lie, I tell. And the man pull up him ring camera and say, yo, so my car in front of my house there.
So you got this in the Long Island area?
Him get it in a bay show.
Was he by himself or him actually go with someone?
Was his wife at the time. So him and his wife at the time purchased a 4-bedroom, 2-bathroom, which was, his purchase price was $490,000 and him come to the closing table with 4,700.
Wow, it's unbelievable.
So I'm say, yo, I don't need for hear nothing. Do it.
Right.
I don't need for be skeptical no more. Him do it.
Right.
So I'm say, yo, Pops call, what I need for do? The man say, yo, go back, log on, pay dues, and it was just $34 a year. Not $34 a month.
You're talking for the membership?
For the membership fee, $34 a year.
$34 a year.
So I'm not have to question that.
Right.
So I'm going to do it. Get a refresh workshop because now it's a year in ed.
Right.
And then I go through the process like everybody did. I upload every month.
Right.
Schedule for a council, and then while my wait, cause them time there it's like a 6 months wait. I still upload every
6
month.
months wait for what? Talk to a counselor?
For talk to a counselor at that time, because
Okay.
at that time it did at fresh.
Right.
So
right.
every month I do it safe for them. I do it.
So you basically say other people didn't know about this program. It's just, wow, we don't know about it. What about the Spanish community? The Spanish community know about this program?
Yeah, I think no. All right, what did happen is, because it was so fresh and so new, other realtors didn't know about it, because there's a lot of requirements that NACA basically asks for when you're purchasing. Then the house have to be like I said, 100% livable. 100% livable. The house have a pass inspection with the NACA inspector, and if there's any deficiency, meaning anything needs to fix, is either seller fix it or the buyer basically have a NACA certified contractor to fix it, then we inspect it. So it was a little bit of moving parts throughout a deal, and at that time it was a high sellers market, so most realtors don't want to have to deal with NACA, right?
Right.
But back to my story. So after I know that and do that, I'm gonna go through it and get my counselor, and then go with my counselor. My wife did have a couple stuff on her credit, and my counselor say, "Oh, you have to sort that out." And as a person,
so you were going with your wife. You weren't going by yourself.
Yeah, I was going with my wife. Of course, the time that I'm married, you see me? No kids. So, go with my wife and themselves.
And why did you choose to go with your wife opposing to going by yourself? Because you still could have get a house by yourself. First time home buyers, like, so why did you choose to go with your wife? Is it that she would make your thing look better, or you'd get more money? How does that work? Why you choose to go with your wife?
Those are good key points, but at that time we were married, we were by a house, we'd live in an apartment.
So it was just a thing to do.
Yeah, we never look on it as me get the first house, you get the first house. We never look on it at that time. At that time, ready for start our family.
Nice.
And we could have started in an apartment. No, my daughter did born 2019. I said, oh yeah, my daughter did born. And we live in a 2-bedroom apartment. So yeah, want more space. So
okay.
At the family. So once the counselor say, "Oh, you need to clear up them things there, and you need to do a budget, and you need to save while I clear up them things there." So clear them up, set back a schedule, and talk back to the counselor.
How long it actually take you to clear up them things there? Because we're talking about a time duration. How long it took you?
So because I do fix credit.
Right.
And I know how to fix credit. It took me like 3 months to clear off a couple of things off of my wife's credit I was supposed to good now. So it took me 3 months.
From the time you started, it took you an extra 3 months just to get yourself in order.
Just to get myself in order.
So at this time, did you have like any car payments or anything like that out there?
At that time, I have our Jeep car payment in 2019. 2019, so if you want the time frame, 2019, I got a meet in 2018, I wait till 2019.
Right.
Like summertime, and then more go back on, wait 6 months, so it going at 2020. And then when it going at 2020, like 2020 more as spring, we'd have to wait 3 more months for clear up the stuff them, do the savings and do what my requirements. So we are talking about 2020.
Like when I said do the savings and do the requirements, what we actually talking about?
The exercise.
Okay.
We were paying. Remember, we were paying rent.
Yeah.
And then more office. So we were paying rent like around $1,300 to $1,400 at that time,
right.
And our mortgage comes up to $2,500, so we'd have to save like another $1,000 to $1,100 for sure. Them said we can manage the mortgage payment. For
how long?
For 3 months. For the 3 months period.
Okay.
Yeah, for the 3 months period. So that's what I'm gonna say. For 3 to 6 months, mere people do it longer. It depends on what they plan for them credit and what requirements take. But normally 3 to 6 months them will take, and them say, all right, they can do it.
So what were the requirements where you need to fulfill other than for save a little extra for show them so you can manage the rent? What other requirements were there?
So one of the requirements was them asked me, say either I'm pay. So my wife did owe around $2,000 upon our credit based on our debt and collections or whatever, right? Them say either wait 2 years, I would don't care about it, or you go pay it, or you can take it off your credit. So we're not pay the 2,000. So I'm say we're gonna take it off your credit. So we'll fight it, take it off of the credit. So that was one of the requirements. Another requirement to have a budget plan. You know what I mean? In terms of I move from a 2-bedroom apartment to a house now. So
Yeah.
them just say, oh, a budget plan and them want to see with spending, and we basically highlight with spending, just track it.
Okay.
And then the savings, the more I'm gonna save an extra 1,000 in the bank, untouched, and make sure some rent pay. So those was my requirement.
And your rent have to pay upon time.
I'm rent have to pay upon time.
Yeah.
You cannot late, not too late. You cannot.
You can't be late.
Cause them gonna ask the landlord fee as like a statement, a year statement, and if the landlord say late, you gotta have some little problems.
You just have to go wait because basically
you have to go wait, or you have to go have a letter of explanation.
Oh yeah, okay.
Say you're in the hospital, or again, COVID come down, you lost your job. At least an explanation will make sense. Cause everybody make mistake. Nakanaga penalize you for reasonable mistake.
Understood. Yeah. Okay.
So once I get through that, counselor say, all right, you're good to go. And counselor give me a thing there. I start my house searching. And then once I start my house searching, in that market, we're talking about 2021 up to 2020 up to 2021. Every COVID hit. All right, everybody want to buy a house.
So basically, you heard about the program in 2018.
Mm-hmm.
You started the program for yourself in 2019.
Heard about the program 2018, was skeptical and hold off till 2019 till my friend buy him house.
Right, and within that time, you get yourself prepared in a 2019, right? I clear up, I meet the requirements, all of that. So in a 2020 now, what happened?
In a 2020, when I get my counselor, in a 2020, you remember some you'd have to wait the 3 months, save up the money and them things there. When after that 3 months they got now, them give me my approval and then I start look from.
So you get your approval in a 2020?
I get my approval in a 2020. And then I start look like we're talking about.
You say it's so casual. November. How was that getting the approval? Because you say it's so casual. Were you excited? Did you expect it? Like, were you nonchalant? Like, you just make it seem like, say, yeah, me get me approval. When somebody get approval from a bank for say, you can go start house search, it's very exciting.
Within a COVID.
Right.
Everybody have mask. Everybody have to stay at distance. There's line
but
outside.
At the end of the day, you still get a house. You're leaving an apartment to a house. And you get an approval.
Mama tell you, the initial process.
Yeah.
Because I was the realtor.
Yeah.
And me, I look for it. And I didn't have.
So you were looking for your own house at that point?
I was looking for my own house.
So you were your own realtor at that point?
I'm my own realtor. So it wasn't fun, it was business.
So at that point, you did NACA certified already?
I was NACA certified.
Okay.
But because I did want to learn the process, I hired a NACA realtor.
Which makes sense.
I tell him, I disclaim it, hey, I'm a realtor. I just want to learn the process. You know, if I bring me up on a showing, I can use the MLS myself. I can do my negotiation or whatever. I want you the NACA things and I want you tell me how that do.
Okay.
So that's the conversation. I say, listen, you gotta have the smoothest thing, but I just want to learn it too. So the man say, oh, all right, no problem. So when I see a house I'm like, show him, hey, when you put it in this much, down payment, this much, CC me on it. And we do that. And then.
But you're never responsible for the down payment. No, NACA, they're responsible for the down payment.
Great question. So this is a perfect question. So it happens when I have clients to cause them say, hey, not gonna require a down payment. So why you want put down money in an escrow? So for a deal, right, you have to bind, in order to bind a contract, well, in the state of New York, mostly, you can buy, you don't have to put on the money in escrow to bind a contract, really, but that have to be
when I say put it on in escrow, what is escrow?
So
for escrow, a first-time home buyer, what is this term?
All right, so escrow is basically an account the attorney make to basically put the funds in that account, which nobody can touch it, but the contract, what the contract stated, can touch that money, right? So it's like a mutual account where it sits there and based upon a contract and the agreement, I gotta determine how that money to basically disperse.
Okay.
So it's like a security account that just nobody can touch. Attorneys are sellers or buyers. It's just based upon a contract.
Okay. So I guess it's just like an insurance policy.
Yes, to bind the contract most of the times.
Okay.
But if you don't put nothing to bind the contract, and why a seller want to buy the contract is so you don't waste them time, basically. Straightforward.
Yeah.
You want to buy my house, you put in an offer. Remember, say no,
Put your money where your mouth there.
I go accept your offer. I'm gonna take my house for the market. I'm not entertain no offer. Right? How me know you serious. So you can't just get up and walk out of the deal so for waste my time.
Understand.
That money you put down,
it's like a percentage. Understand.
Yes.
Understand.
So that's what I used to buy in the contract, and it was a $25,000 I'm buying the contract with. And
you're
then
buying a contract with 25,000.
With 25,000.
I thought that was to buy down the points.
You see, I asked a good question, them cause for make it make sense. Perfect. That remember them, they require down payment or closing costs, right? But to bind the contract, I put $25,000. And because I know I want to buy down the points, I'm going to use that $25,000 buy down the points. So while I'm buying the contract.
So this is the same 25,000 we're talking about?
The same 25,000.
Okay.
That's really it. 1,000 we use buy down the points to put my interest rate.
So you're saying the 25,000 was not a down payment?
It was not a down payment.
That's just to bind the contract.
That's just to bind the contract.
So
and I use that money.
So you could have used less money buying the contract?
I could use less money buying the contract, but I want to be aggressive to show seriousness and for basically make the seller know say, all right, I have $25,000 upon the line. Right. And now I go walk out, and if I walk out, you get $25,000.
Okay. Yeah, but tell me about the process of finding the house, because we'd even reach close yet. Like,
oh, you want me to tell you that process then, brother?
Yeah, all right, know the process of finding the house.
So
this was not the first house, right? Because you actually saw houses the way. So they put in an offer for the other house?
I put in about 20 offers. Like over asking, because at that time it was a seller's market. What I mean by seller's market?
Yeah.
Supply and demand. There was less houses and everybody want to buy. Everybody was want to move out of the city to come Long Island because nobody know where COVID are go.
And the city was going. Yeah, I remember that period. Yeah.
So there was lines, on top of lines, on top of lines. And
we're still in 2020, 2021. That's where we are. That's the timeline.
2021.
When COVID hot. Right.
And we don't know where everybody get money from, but everybody want to buy a house. So we'd have to be strategic.
I have a piece of food myself, so I get it.
So we'll look on about over around 60 houses, brother.
Wow.
Because remember, I was a realtor at the time, so I have an MLS. I could I say private showing as a realtor before them put it on the market, and could I say public showing as a realtor with everybody put. So may I look on all houses.
Okay.
At one point we just get outbid, and me and my wife say, yo, it don't make sense. We see 50 house, we can look on the picture and know say, yo, if it alright-ish, right? So what we do, we stay inside. I may surf through the MLS. I'm gonna see.
And at this point, you look for a 3-bedroom because of the baby coming and playing now.
Yeah, me look for the minimum 3 beds, must 2 bathrooms.
And at what price range where I look for at this point?
I was looking. All right. The great thing with NACA is again, them don't approve you with purchasing price. Them approve you with how much you can manage with mortgage, and that makes it very creative. How it makes it creative.
So all my counsel, they tell me say them not give me more than 3 bills. The time I tell me say them not give me more than 3 bills, and I'm like,
who was a NACA realtor?
I didn't have a realtor. Well, I just met a counsel that talk.
All right, probably a counsel not even know how it work. So how it work? Them say you can't pass a number. We're gonna say them say Kenra, you can't pass $3,000 monthly mortgage. Yeah. When you go on NACA, you see NACA calculator, right? Yeah. You cannot exceed your monthly mortgage.
Okay.
So taxes I got in a coming at the calculation. The lower the taxes are, the higher your purchasing price can go. So the higher the taxes are, the lower your purchasing price can go, because with the purchasing price and the taxes calculated, it's going to determine how much is your monthly mortgage.
What are important questions? Take up in. Because I remember when me and the counselor talked about this, right? And she said to me that basically what she said was, she said she don't want me, them don't want me to pay more than $1,900, right? That them comfortable with me to pay.
That's
right,
a monthly mortgage.
Exactly, based off the salary what I have, right? But not that yet. I was saying to her, what if, all right, so I have around 3 credit cards, right? I say, what if I pay off my credit card them and pay off my car loan? would that then increase the amount that I'm getting? Right? Because now I have room, I have leverage, I have more money coming in. So therefore, it's supposed to actually give me a boost now for say, hey, if you could afford $2,000, no, you can't afford 125. But she tell me say no. She tell me say, regardless if I pay off all of that, she said, based on my income, this is what they are comfortable with me paying.
Yeah,
but if I go to a traditional lender now and I say, all right, then I go get rid of that, literally my debt to income ratio get better because now I have more income and the debt basically erased. So therefore, them I go give me more money. But why NACA say no to that? Like, I don't understand it.
Because NACA will look on it and say you can get back at this position when you apply for it. So NACA will look on it say, all right, then you apply for it at this point in time, right?
Right.
And based on their calculations and their numbers and everything, they remember they're gonna be not gonna give the loan and
They better not.
NACA hand over the account to Bank of America and Bank of America get the loan.
So you're getting the loan through Bank of America.
Bank of America.
That's their only partner?
As based on my knowledge.
Yeah.
Yes.
Okay. Because I hear that it's better to go through like brokers rather than go to a traditional bank. Because the rate's probably better from a broker.
It all depends.
Okay.
It can never like pinpoint. All right. So when anybody watch this, when you are house shopping and are about to go house shopping and you decide to run your credit for mortgage, the credit bureau allow 14 days for you to get multiple options without hurting your score. So within that
serious?
14 days,
Wow.
14 days, I always recommend get 3 options, right?
Right.
And then now you decide in terms of
when you say 3 options, are we talking about just
you can go mortgage bank, you can go to mortgage bank up, or you can go directly to the bank.
Or you can go even a credit union.
Or you can go with a credit union. Just
Right.
just up to 3 without damaging your credit score. Because remember,
Really?
after the 14 days, I pull it again.
So you're saying no hard inquiry upon my report?
You're going to get hard inquiry, but you're not going to get points lost.
Oh, okay. But for each bank I go to within that 14-day period, will I be getting a hard inquiry?
Yeah, I'm going to get inquiries say, then pull your account, but you're not going to lose points.
Yeah, but that, I mean, hard inquiry doesn't come off for your credit report till like, what, 2 years' time?
2 years' time.
That's, I mean, if I have like 3 different hard inquiry upon your report, how does that look to a lender?
The lender going to understand say you're house shopping. The lender
Okay.
gonna know say you're house shopping, and the lender gonna see the time frame that you get these hard inquiries in. That's why in 14 days it not gonna look away. After the 14 days, say every month you got the lender now it gonna look away.
So you say basically once me get that 14-day grace period, they just run it red.
No, don't just run it red. Just get 3 options.
Okay.
Get 3 options. Don't run it red. Just first we're gonna put things are a checklist that you need for think about first as a first time home buyer before you start the process.
Okay.
1, you need for know you're gonna know what area you want to live in now.
Right.
Like I say, you know what you know what area you want to live in now.
Yeah.
You're gonna look on that area there and you gonna see what's the purchasing price in that area.
Right.
You're gonna see what's your purchasing price in that area. What you're gonna do, you're gonna try to save up 3.5%. If
you know, them ask me enough too. Them ask me about taxes. Every lender I talk to ask me what is the tax for that area.
Again,
I'm like, how am I to know that?
Because the higher the taxes,
right,
the lower your purchasing price. Because the taxes, let's say you get a tax fee. Hempstead tax is one of the highest tax I see.
And Brookhaven,
when sell a house and the taxes was $19,000, right?
Oh, wow, okay.
$19,000 is a set price you're going to have to pay.
Yeah.
$1,000 not go up or not go well. If you agree with your taxes and stuff like that, it can go up and it can go down. But $19,000, so you can divide $19,000 by 12, right? Alone I just got to taxes. Oh, you have to consider homeowners insurance, right? So taxes, homeowners insurance is a must. I forgot to pay that, right?
Right.
No, you gotta talk about your mortgage. So lenders want to know what the tax area for all right, for gauge intelligently and estimate where you look on a monthly payment. So the lower the taxes, the higher the purchase prices can be. Queens have this a lower set of taxes where Queens tax can be low as 3,500 for the year. So now you
Wow.
divide
Okay.
3,500 into 12, yeah, I get couple $100.
Right.
No, you can go up more. That's why Queens and the boroughs properties them tend to be a little bit higher
Right.
because the taxes is lower. Long
Okay.
Island, you can find some lower purchasing price because the taxes are higher. So it vice versa, you know what I mean? It play
Okay.
against it. So you always have to put in consideration what the taxes are because the taxes is a guaranteed payment. You have to pay that a year. Even when you pay off your mortgage, you still have to pay your taxes them.
Right. Right.
So once you understand what the taxes are in that year, and Maga disclaim this word, bankers are people that educate people, and realtors should educate first time home buyers. Your taxes goes up every year. So your mortgage in 2025 might be
Mm-hmm.
$3,000.
Mm.
And then you come in 2021, it might be 3,120. And then 2022, it might be 3,200. And that it goes up
Oh, I
every year.
thought
So you
only
have to
apartments did that because I know apartment add on money to your rent like
no
every
money
year.
taxes go up every year.
Okay. Okay.
Every year. Me
Okay.
never did. Yo, as a realtor myself, remember, first time home buyer,
Mm-hmm.
I say, wait a go. And sometimes your homeowner's insurance goes up as well.
All right. So we strayed long enough. Talk to me now about your process when you da search for your home. Yeah.
So we reach on a point where me and my wife say, yo, listen, we say over 50 house with their home. We know based on the pictures them, we can tell our gauge if a house look good. So we're not even go out no more. We just
Right.
put in offers our yard. Put in offers. And then because I'm a top negotiator, we
Right.
know certain strategies. So somebody, a realtor call me back and say, hey, we got your offer, the deal fell through, or you still interested? So I'm say, for sure. I say, what was the address again? And them tell me the address and I say, hey, you know that my wife, I think she saw the property, but I was at work. I didn't see the property. Is it possible for me to stop by and just to get a last look? And then at that date, that time, I'll tell you to move forward. So them say, hey, you have until tomorrow. So I say, sure, perfect. So me and my wife go look on it and it looked good. I was like, wow,
Okay.
outside the house looked smaller. When I come inside, it was a 4-bedroom, 2-bathroom, basement, dormer
Are you
extended.
talking about your property that you're at now?
My house. And then you come
Okay.
on my yard. Big
Right.
backyard, detached garage, driveway, like a great neighborhood. So I say, realtor, yeah man, at this my wife did a tabo. We'll move forward with the deal, yeah? Move forward with the deal. So they were asking for I think 540. So how much did the deal is we put $540,000. So I'm gonna say,
Okay.
yo, all
For a
right, I'm gonna put
4-bedroom,
in
how many bath?
4-bedroom, 2 baths,
Plus a garage.
plus the garage and taxes.
Mm-hmm.
Taxes at that time was 7,800 for the year.
Okay. Wow. Okay. Okay.
Can't lose.
Yeah.
So I'm
Yeah.
gonna say,
Yeah. Yeah.
yo,
Yeah.
yeah, ready. So I put in an offer 10,000 over the asking, which is at 550, right?
Yeah.
The appraisal come back, and appraisal meaning the bank assessment that what the house is worth. So the bank came back and said it's 545. So the realtor come back and say, hey, the seller wants to know if you're going to pay the 5,000 extra because the bank know. Remember, my offer is 550.
Yeah.
The property value for 545. So you have a $5,000 gap. So the seller is like, since it's a $5,000 gap, give us it. I'm gonna say, yo, just take the 545. You still get over your asking
Over your asking price.
because your asking
But they
price
wanted
was
the entire
They
10,000.
wanted the 10,000. I'm gonna say, yo, this is gonna make or break the deal. Meet me in the middle. I'm gonna give you $500 and $1,000, right?
Right.
And I'm saying, all right. So all right, they get
Them get
7,000.
greedy
It's
they
at
got
the
greedy.
time.
Yeah.
So after that, we'll accept it. Then I have to hire my NACA attorney. So I have to get a NACA attorney for basically New York is an attorney state. Other states, the realtors them can do the contract. So I need an attorney to do the real estate contract because New York State is an attorney state. So I get the attorney draft of the contract, and know everything. Once everything's signed, my money sent, plan. I cut apart before the contract draft up. While the contract draft up, I have to do my inspection. I had to hire a NACA a NACA certified inspector.
Everyone gotta have NACA in front of
Everyone
their
have to have NACA in front of them name.
Okay.
Everybody have to have NACA. Realtor NACA, inspector NACA, construction worker NACA, attorney
Lion.
NACA.
Yeah, okay.
Yes.
Okay.
I am a NACA inspector. My NACA inspector come through and everything. When I say
Right.
no problem, like it was good. So we say, all right, boom. So we send up that inspection contract to NACA and everything good and NACA no complain. Boom, right? No, and there's so much things before going into details. Touch the inspection report. So if you hire a NACA realtor and the NACA realtor says if there's something supposed to fix, if he puts it under recommendation, I can naga tell you say if fix it or require for fix it. It's more for recommendation. But if the inspector stated that it is unsafe and it needs to be fixed and something broke before you can go in at the deal. Well, you can go in at the deal. Them not go want all up the deal and say, yo, before you go contract, you have to fix this. They're saying before you close, this deficiency have to be taken care of. There's 3 ways you can take care of it. Well, we do a deal last year and we kind of can waive it. So we can waive it, which that was new to me. But them say, hey, you can waive it, and then make the buyer know, say, yo, you're waiving this, whatever. So the buyer waive it. But you either have to make the seller fix it, or you have to fix it, but you would have to get a NACA construction person come to evaluate the fix and give you a quotation with NACA upon it, send it up to NACA, and then NACA gonna say, all right, you have to fix this.
That seems like it would take some time though.
That I will say as a NACA realtor, it hard a little bit. Like if somebody want to use NACA for a fixer-upper, it can take a little leg room for work like, the deal.
Yeah, definitely.
If NACA is a great thing, I use it and I recommend, and I have my buyers use it. But some things have bad things to it, and that's one of the negative. That's one.
But all right, so you're putting your money now, right?
Yeah. For the contract sign. Yeah. Once contract signed, no NACA, I gotta do them process again. Like
I was still in 2019.
2021.
Okay.
So I put in the offer March of 2021 and start process and everything.
Okay.
Put in the offer March and start the process and everything, right?
Right.
So NACA now basically take the file, send it over to Bank of America. Now we go to underwriting. Now we go to appraisal. Appraisal come out here and all of them things there. Loans and all of them things there. Boom. Reach to June of 2021. So now them say, all right, loan approve, ready for close. So we'll set the date to go to closing June 21st, 2021. My wife already pack up the apartment and say, yo, listen, once you put this in the church, just know someone I'll come back tonight. I'm sleep on the ground in my new house. So I mean, now if I come back, come sweep it out, and just say, yo, you can do that, man. You can manage that. So we'll pack up and we went to closing, and then basically tell you your final number where technically we are gonna need. So guess how my final number I need for bring to closing. Cause remember I use the 25,000 buy down the points. So the whole of the 25,000 I buy down the points.
Right.
So like
I would say your final number, if your friend pay $4,000, I guess around the same $4,000.
People not gonna believe me, but you know I always have receipt.
Right.
My final number was $12.
$12,000?
12.
As in $12, like literally $12?
Dollar and couple of cents.
You bring out the closing costs?
Not even me bring my wife say, yo, I got it. Easy yourself. Write a check for $12. And she wrote a check for $12 and couple cents. So remember, they don't require closing costs, they don't require down payment, and they don't require attorney fee. I wanted to use my 25,000 to pay down my points and to subtract whatever fees I need to pay, like transfer taxes and stuff like that.
But as I said, still, they do require that you have some money, because talking to my counselor wanted me to have at least 5,000 something in my account.
It depends by your purchasing price.
Yeah.
If you lower your purchasing price, it'll lower payments and so forth like that. So yeah, I have one of my good friends
Right.
purchase a 3 bedroom, 1 bathroom in Medford,
Mm-hmm.
and all they had save up was $10,000. They
Mm-hmm.
purchased a property with all of the fees for $10,000, and the purchasing price was around 375. So them used $10,000 purchase a house, 375.
Wow.
And then another client of mine's used, because them want buy down the points and fees and everything, they
Yeah.
purchased a 675,000 house in Babylon, which is
Mm.
a 3 beds, 2 bath, pool, detached garage, driveway in North Babylon for just $40,000 out of pocket. So the question is, does NACA worth the wait and all of that
I was
process?
just about to ask you if you would recommend NACA.
I would recommend NACA if you have the patience and
Right.
the discipline.
I mean, it's real discipline. But I think what would have stopped people basically? I don't even know because
The timing, and just the requirement without turn off people.
yeah, and if them I give you the money where you really want to, because I think that's the
Yeah,
next one.
that's our next one. Again, them not gonna give you based upon what they on papers. So
Mm-hmm.
you have to give them as much information. If you have the side hustle, you give them your side hustle numbers, because
Okay.
the more you can show them,
You're right.
more basically income you have, or the more money you can get.
Which makes sense. Which makes sense.
It often makes sense. It's a numbers game.
So I mean, so based upon your experience, you'd have say once anybody a buy a house, you'd have definitely recommend some assistance program.
If remember, these assistant program comes with a lot of requirements.
Right. And I
So
hear even with the NACA, let's go back to NACA for a minute because I hear that
mhm.
you have to be in the house. It have to be your primary residence. So you can't use it as an investment property. It has to be a primary residence and you gotta stay in this property for 5 years, right?
No, Yafe. Let's correct the term, use it as an investment property. You can
Yeah.
use NACA to buy multi-family unit. You just have to live on the property.
Okay. Okay.
So you
Okay.
can't use NACA as a flip investment, but you
Okay.
can use NACA as a long-term investment as long as it's your primary residence and you live on the property.
Mm-hmm. Okay. Okay.
So when people say, "Oh, you can't use it as investment," you can, but you can't use NACA as buying and flipping. You have to hold the property minimum of 5 years, because when them spend and put the
Mm-hmm.
money in, the more I say, yo, their goal is to do housing retention, right?
Right.
And neighborhood retention. So them don't want a lot of investor get it. You see what I say?
Okay.
So them
Okay.
say,
Okay.
that's the only catch I will say to NACA, and just the requirements. Say, hey, do this. No, with how them change the policy,
Mm-hmm.
if you have the money and do tradition and conventional,
Mm-hmm.
you're gonna purchase way quicker, and you're gonna basically purchase a little bit smoother.
Okay.
No, because of the requirements, NACA is good. If you're disciplined enough and you're
Mm-hmm.
patient enough, it's a
Mm-hmm.
great program.
Okay.
If you have the money
Mm-hmm.
and you just want purchase a property, nobody have to tell us, say, you have to do this, you have to do that, you have to do that, you require to do this, you require to do that. You
Right.
have the money and want to do it, I say go traditional. If you have the money, I can do it. The question is still, I should go NACA. I will say, and it's my honest opinion, go traditional.
Okay. 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 Well, I mean, that's fair enough. But with NACA, I mean, does NACA come with PMI?
Great question. What is PMI?
Like what from my knowledge is private mortgage insurance.
That's what it stands for, but what it does.
Well, I hear that when you do, well, this is my knowledge. When you don't go with your 20%, right? You go with your 3.5 or just say anything less than 20%, right? They have a thing that's called private mortgage insurance for protect the seller, right?
It not protect the seller, it protect the bank.
It'll protect the bank.
It's protecting the bank investment in terms of you don't put down 3.5%. They want to do PMI to basically get, remember, the first year or the first set of years is pure insurance. Majority of your money you're paying on a mortgage in the first couple set of years goes more to insurance, and the remaining of the year tend to go more towards your principal. So them put on a little bit more insurance for basically protect themselves. You're not gonna protect the seller. What PMI protects seller? It's not a woman's insurance. They're not gonna get back the money there. So when you do reach at a certain point in your payment, you can request the bank now for take off the extra PMI.
Oh, okay. Okay. But
So
I
yeah,
mean, I guess that
that's
would
a
be a couple of years down the
great
line.
question.
Yeah.
So NACA, when you hear about NACA, think of NACA give you FHA benefits in a conventional loan settings.
What does that mean?
Meaning you don't get PMI. So you get
Okay.
in our conventional loan settings where no PMI, no mortgage insurance, and you can buy down your points.
Okay.
So you get FHA benefits with our conventional settings.
Okay. Okay. Well, okay. I mean, I think we touch everything. I don't know if we have more to touch on.
There's a lot more to touch
I'm
based
sure we
on
have so much more to talk about when it comes to NACA and just assistance program overall, because that's just one out of the many,
yes.
So yeah, but I mean, in the interest of time, we're gonna leave it right here. I mean, anything you want to add?
What I want to add is anybody purchasing the state of New York or traditional, reach out to me.
Right.
I'm a licensed real estate agent in the state of New York, and I'm also a certified NACA realtor. If you have any questions or concerns or just needs education in terms of first time home buyer, reach out to me. If you have a property that you want to sell, reach out to me. I'm forming a team right now, so reach out to me. Anything pertaining real estate. No, what I want to disclose is I used to do rentals, but because of how my schedules is set up, I do have a 9 to 5. It's harder for me to give the best service to my clients, to my renters clients. So I stepped away from rentals. So I only do strictly, mostly I'm a buyer's agent. But again, I'm setting up a team to be focused on listing.
And I also know that you have your McAdams credit builders, right? So I mean, to get them prepared, right? To get a home, I mean, your credit offer good, we know that, right? And in interest rates, right? So the better your credit be, the better the interest rate be for you,
So
right? So I
yes,
know, yeah. So you
I
can
have
expound on that as well.
sure. So I started McAdams Capital Builders to do initial prepping for your big purchase. Purchase such as your a car, purchase such as your house, purchase such as a business, where credit plays a very pivot point in getting loans. Now, if you have the cash, go spend the cash. But if you need some form of loans, car loans, mortgage, business loans, all of those things are the cipher through your personal credit. So what I did with McAdams Capital Builders, I don't just focus on credit, I focus on more of the education part of credit, where there's a lot of things to dive into just credit and where you want your credit to be, which, DJ Anthony the driver
Right? Boom.
and I will basically go on our next episode and go dive into such thing as credit, to understand credit,
Yeah,
what
that
is
needs like
credit,
an episode for
a
itself.
whole episode for itself.
Yeah, yeah, for
But
sure, for sure.
McAdams Capital Builders, we at McAdams Capital Builders help you understand your credit, not just
Yeah.
fix it, but
I
just to
like the
understand it.
diversity though, because I mean you're in real estate, right? And you actually help people get to the point where they need to get to actually buy a house where credit is concerned,
Yeah.
right? So and I like the information that you give out, because I mean at the end of the day, these things are not taught. You get what I say?
Yes.
A lot of people have to go up on YouTube University to actually get the knowledge what they need. Place, right? For you see my camera just switch.
Yeah.
Actually, yeah, because my real camera dead. So if you actually come one place and actually I get all the information we need, you get what I say? I think that's very important, you know?
Because knowledge is power. The thing
For
with
sure.
the thing with both everything is why the rich stay rich and get rich is basically really knowledge, because you can do it too. Anybody can do it too. I'm a testimony to a good journey of going success, where
Right.
I have an amazing career,
Right.
2 businesses, multiple properties.
Yeah, don't give
No
away too
car
much,
notes,
because that's
no
an
got
that's
I
an
won't
episode for
episode.
itself.
So yeah,
Because I mean, we definitely want to get into that. You see me for the next episode. We want to get
For
into
sure.
just the journey overall. You see me of leaving Jamaica to America. So I mean, don't do all of that. No, this was just for NACA. You know?
Alright.
Yeah. So as I said, we're gonna leave it there. All right. Guys, I want to thank you for tuning in, right? As I said, we got so much more coming your way, right?
So much.
Kenroy the Realtor, always a blessing. Right? My co-host, just a plethora of knowledge. You get what I say? When it comes to you just being a first-time home buyer, and getting yourself ready and prepared. So I mean, Oh, what more can we ask for? Like me have one of the one of the best co-hosts right beside me. I get what me I say?
Definitely.
Yes, I mean, definitely want to thank everyone for tuning in. Look out for the next episode. Make sure say like, subscribe,
Cheer.
share the content. Don't stop share the content because when I have to put we in the algorithm, so now continue to get the information we need. You get what me I say? All of my Jamaicans out there, make sure so now support the content because this content was built solely. Well, I won't say just for you, but you know, our focus and priority was on you. You know, anything you want to add, my general?
All I'm gonna say again, as Nick, as Anthony the driver stated, keeping an algorithm, we're gonna just share with knowledge. And you know what the thing is, we're not charge nobody. We just say,
For
yo,
sure, for
we
sure.
just
This is
get
out
the
of
knowledge
love.
out there.
This is
Out of
definitely
love.
out of love.
Out of
Cause
love.
we're not making no bag of money for podcasts. Podcasts
Out
don't
of
make no
love.
bag of money. You get me? So definitely it's just out of love.
So
You
out
know?
of love.
And
So just
knowledge. Share the knowledge and the
subscribe.
wisdom.
That's it. And tune in.
And tune in, definitely tune in. You know, as I say, every week we try upload something for you, just to keep it coming. Yeah, man, just interact with we as we interact with Uno. You get what I say? Because it's needed. It's definitely needed. Like we all need to become home owners. We all need to become home owners, right? I hear them say wealth building starts from owning your first home, right?
Real estate and property.
Exactly. So, I mean, we all need to become homeowners, right? Don't watch the next man beside you. Watch yourself. And if you feel like you can't do it, talk to Ken Roy.
All right, then.
That is it. So, see you in the next one.
All right.
Yeah.